Hey, what's up? Welcome to DGenEd for the After Hours update on Tuesday, October 14th. Starting this half an hour earlier than I was initially intending, but this just works a little bit better with my work schedule. So I come home from work, do this, and then get on with the day. So hopefully this is an all right time with you guys, but if not, you could always watch it after the fact. And I do see that we do have somebody in the chat, so just going to pull up ProScav saying, let's go. So yeah, let's see what we got in the charts. And so there are a few tickers that I wanted to go over, but I did want to start with the SPX or the S&P 500. You could also look at the SPY. But yeah, and really, my thought process with this, why I think the bottom could be in or maybe just forming this week. There is something that didn't happen today that I would have liked to see, but we got pretty close to it. And so what we can see here in the chart is that we have this big red candle, of course, on Friday, October 10th. You know, it's kind of interesting. I feel like Friday the 13th in October is, bad luck. Yesterday was the 13th. And yeah, I don't know. So it wasn't the 13th last Friday, but we can see this big red candle here came down 2.71%. Lots of stuff selling off, crypto as well. And one thing it's a saying is that, markets rarely bottom on Fridays. I heard that from Tom Lee, who is, of course, the chairman of BitMine, also Granny Shots, and, just very outspoken for Ethereum and, the bull market continuing higher, that this is the most hated rally. And yeah, on Friday, he talked about, that markets rarely bottom on Fridays. And so what you effectively want to see is kind of a continuation down to then put in the bottom Monday, Tuesday, or, the following week. And so what we saw, this big red candle hitting a low on the day of 6,550 and 78 cents. But then on Monday, yesterday, which was a bank holiday, so stock market still open, bond market still open, just banks and, even more, I guess, of the government is closed on, a bank holiday like yesterday. And we saw an inside bar here, gap up. And yeah, looked pretty good yesterday. However, with the bottom rarely forming or markets rarely bottoming on Friday, this made me think that, hey, maybe we'd see the bottom actually form on Tuesday, bank holiday, and so Monday is kind of exempt from that continuation down. And so what do we see today? Maybe we've seen a bottom. What was the low? The low was actually a little bit higher than the low on Friday, so that does make me think we could see another day or two down this week. But the thing that I do like about the candle pattern for the day is, it's green. Of course, we did close higher than we opened, and we nearly filled the gap. So that close, let's see, like I said, was at actually, the close was a little bit higher than the low. And so the close, and actually maybe that's a good point. We should be thinking about that. The close on Friday the 10th was at 6,000. And maybe I'll just pull it up with the calculator so you can see the numbers that I'm talking about a little bit clearer. So yeah, the close, let's see over here on that Friday. I think I've got the calculator app up. Yeah, so that was $6,502.52 on that Friday. And so from that, I'm just going to subtract the low from today. And so that was 6,644 and 30 cents. So a little bit higher. So that negative number, it's because today's low was a little bit higher. So there's still a little bit of a gap there, about $100 gap to the downside that we didn't fill. So maybe that's a little bit concerning that markets will continue a little bit lower. And then also we can see that 50-day simple moving average is right around $6,544.44. So maybe that it's tested access support later this week. But yeah, I mean, what I wanted to see was, more downside, that the bounce from yesterday was not that the bottom was in. Maybe we're still forming it. So with that gap still being there, the 50-day SMA still being below the low for the day, I think that we could still be heading a little bit lower. But what I wanted to talk about, forgot to mention it, about the candle pattern for the day, is big wick to the upside, big wick to the downside, in that kind of fat little bodied candle, little spinning top there. That could be suggesting a reversal. So that would be, like coming down here, then bouncing, reversing, and then to go up. So maybe we see that, but with those wicks up and down, it's not necessarily that clear that the bottom is in. So maybe we do see it go higher, but maybe we do see it test those lows. So I did just want to point that out, but I just think it's really interesting with Friday, the bottom not necessarily being in just yet, because we didn't go lower than that today. But that could also be the fake out that, people on Friday see, like what I just pulled up in the calculator, 6,552 and 52 cents. People are like, okay, well, I will place my buy orders at that close, because if the low is not formed on a Friday, the bottom's not formed on a Friday, that order would then get filled and then we go back up. Because maybe we just barely pierce that level. But at the same time, what will be like maximum pain? Is everybody seeing that number? Oh, I'm going to wait for it. I'm going to wait for that order to fill, and then we can go up. And we actually just, wick down to $100 or $92 above it, and then those wanting that fill get left behind. So I just find that to be pretty interesting. And so I wanted to point that out. And I did want to point out another ticker that I'll pull up in just a second. I'm just going to pull up some of the chat. Pro Scav is saying, hey, so hey, what's up? How's it going? Happy Tuesday. And then let's see, Chris is saying something about when. So I'll try to pull up Wendy's towards the end. Hit 854 this morning, then had a strong rebound back to 903. Nice. Looks like the bottom could be in. Could be in for a lot of things. Could have got out today with small profit, but you're holding. So cool, nice. Yeah, trade your plan. Do whatever works for you. And then Sunny is saying good afternoon. Good afternoon to you as well. And so, I will continue on with the next ticker that I have on the list, which is Coinbase. This is one that I believe I covered in a stream not too long ago, and I placed an alert. And I think, actually, I should have, I'm going to take a step back. The SPY, see if I had any drawings up there. I had my drawings hidden. Oh, okay, yeah, so I did have a drawing there. That was the low here at $6,569.22. We pierced it today. We pierced it on Friday. Maybe that is corresponding with the bottom. So, another thing there to look at. But anyways, enough about the S&P 500. Let's look over at Coinbase. And so, when I had drawn this inverse head and shoulders pattern, also kind of drew this extension to the upside, did get a move to the 100% extension around 379, right around there, actually hitting a high on Friday, October 10th at a price of $402.16, but we have pulled back some. And so what I wanted to mention, I'm just going to pull it up on my phone so I read you the correct number. I had an alert go off yesterday. I wanted to stream yesterday, but I just came home, was dead tired, decided didn't make sense, shouldn't do it. So I had an alert go off yesterday for Coinbase, also go off today for $350. And we closed below $350 at $341. And so what we saw yesterday when that alert went off, we saw a low. Oh, actually that was, what's going on here? This is saying Monday, October 13th. Yeah, okay, I was thinking Friday the 13th. I confused myself there. But yeah, Monday, October 13th, hit a low of 341.84. So clearly that alert went off. Why did I have that alert? Why didn't I have levels drawn up here that would correspond with that? Because it was really just kind of like a rough approximation of the highs that we saw over here, that this prior resistance, maybe I remove that so we can see the high on August 13th was 345.39, and then the high over here on September 18th was 351.89. So with that, and also the gap down, the high following this gap down on August 1st, that high was 337.58. So I was kind of viewing that there is some prior resistance here that might get flipped to support, and we wouldn't really start to see that to be getting tested until we hit around 350. So that's why I had that alert there. And that is, as you can see, the neckline for this inverse head and shoulders pattern that I have drawn up here. So we have this, bullish pattern that's formed, a breakout, and now, yesterday, maybe on Friday, we were retesting that neckline. I should note the low on Friday, the 10th, was 351.63, so my alert was not going off then. I wasn't paying attention to it. I'm not a shareholder, but I do use Coinbase. And yeah, so this could be like a retest of that neckline. What we're seeing now could be a fake out breakdown below the neckline before we start to rally. So maybe this is a little bit of a shakeout that we're seeing, but what I'm seeing in the chart, big red day on that Friday coming down 7.75%. Then we see this hammer candle, big wick to the downside, suggesting that buyers are stepping in. However, we don't see, a lot of volume saying that that's pushing it back up there. Less volume than we saw on Friday, but maybe that's to be expected, giving this large red candle here, lots of volume behind it. Makes sense. Smaller candle, less volume. Makes sense as well. But then what we saw today was, it looks like a gap down and a green day. So that is good. Did close higher than we opened, but it did, gap down. So it was a red day, even though the candle is green. That's just suggesting the direction from open to close. But from yesterday's close to today's close, it's red. And yeah, and so with that being said, closing around 342, 343, maybe the bottom's in. Maybe this is going to start to roll over. If we get a surge in volume, I could see that happening. But we also have the 50-day SMA there at around, let's see, 326.58. So maybe that acts as support before it does start to go higher. And what we can do is draw a little Fibonacci retracement. So I'm just going to do it. I'm actually going to do two of them, but I'm really just going to adjust this one. I'm going to do this from the low of this right inverted shoulder up to the high over here. And we can see that, we're right around the 618, so that's very interesting. And that is at a price of right around 341. We do have the 786 below us, though. That's at 325, and that does correspond pretty nicely with that 50 SMA. So I could see that as being a very sound support down there if it does go lower. But it also may not, or if there are any orders to be placed there, they may not get filled because it might be kind of just like a tease looking at that. But then I also wanted to extend this over just to get kind of the bigger picture, extend it over to the low of the head here. And so that's the low hit, let's see, on August 20th. These levels just being approximate, but we can see that we've nearly gotten to that 618, which is around 334. And the 786 would be around 315. So, however you want to draw this, however you want to think about this. And actually, this is something that was mentioned in a video by Free Wyckoffs yesterday. Rather than going from, the exact low of the wick, the exact high up here, maybe we could just go to like kind of the consolidation lows or the bases of those candles. So I'm just going to line that up here. We had a lot of support, lots of tests of that level over here. And then I might just draw that up to, let's see the open from this day, October 6th, that was around 390. And so looking at that, yeah, I mean, it's pretty similar to what I drawn, but the 618 around, actually, it looks exactly like it's at $333. So maybe that's a nice level. Maybe we don't get exactly to the 50-day simple moving average at around 326, 327. Maybe 333 is the bottom for this. So yeah, I mean, I have no idea. I don't have a position, don't plan on getting a position, but I did find that to be interesting. And one thing that we can do, I don't think I have anything for coin pulled up here. So I'm actually just going to open up a new tab and we can look at some flow data just real quick to look up Coinbase, just to see whatever contract, so I can look at the net call and put premium over here. It doesn't look like it's that great. If I just look at the 1 day, we can see that net put premium in red was more or less flat, but did go up by $1 million. And then in green, we see the net call premium. That actually came down by $12.31 million. So not looking so good there. And then also what we can see yesterday, Brian Armstrong, the CEO, sold 25,000 shares on the 13th. And we can look over at the insider transactions over here. And it looks like there were actually two sales. Brian Armstrong, it looks like the filing date was the 14th, and that was about $9 million. And then Emily Choi Trust, I'm not sure that, but it's another sale. And that was around 7.74 million, and that was filed and traded on the 10th last Friday. So this is, let's see, 9 plus a little less than 8, let's just say 9 plus 7. That's about $16 million coming out. And then also beginning of October, the trade date was October 2nd. It looks like Brian Armstrong again took out $9 million. So it seems like actually maybe the bottom's not in for Coinbase if Brian is selling, let's see, close to, is that $18 million plus Emily as well selling some. Brian also sold more over, or actually that was a conversion. So something to consider there. But yeah, millions of dollars coming out, so maybe that doesn't look so good. If we look at the max pain for Coinbase, we can see that for this coming Friday, it is 340, and current price is right around 342.75. Next Friday, max pain's around 352, so it might be bouncing a little bit. I believe that is the, I'm not sure if the 24th is the monthly or if that's this week. It might be this week. And then Halloween at 340. So it might be going up and down a little bit from where it's at right now. So maybe the bottom's not in just yet. Maybe we actually, just kind of form it over the next 2-3 weeks before going higher. So yeah, I would actually wait for 325. I suspect that will be tested, if not lower, maybe coming down to 320 or 317 or 18. So yeah, I'd be cautious of that. And then let's see, Benjamin, perfect timing. You know what I was just about to pull up, and I do believe that I have it in the list over here. I've gone over the S&P 500, gone over Coinbase. Next on the list, I am going to go over Mara. And so that is actually, one, as you know, that I hold some small share position, small call position. But I did trim a little bit of the calls just because today, because it went up. I think I still have 5 contracts, $50 strikes that expire in January because we saw this, massive green candle, and I had a limit order for my contract to sell, and it got filled. And my kind of thesis is I am not going to sell contracts on it unless, I decide that it's less risky because it's further out to just kind of hold a contract that's very green for me, and my contracts are pretty green. Than to sell shares. And so right now I'm still in the position of trimming my contracts. And once I get down to a point where maybe I have 1 contract left, then maybe I would just say, well, I'm going to hold it in case it keeps going up. But then I would, that would be, I'd be fine with it going to 0. I'm not at that point yet. I'm still holding the small share position that I have. And actually there's something that I could show from Webull if I pull that up. But just to go over the chart over here, let's see this fib retracement that I have. That's not really going to be useful because we have pulled back to that 618 around 18 bucks. I think I talked about that, and I think it did trade maybe a little bit below 18. I think 18.19. I think that's what I had actually more recently talked about. Did pull back to that, so that's good. But now that we have bounced and we have put in a new high, this fib retracement, I guess, and that's actually locked into place. So it's legit. But since we have put in a new high, I could, just kind of extend this retracement up. But let's see, because I think a more proper way to draw that would actually be going from the low over here, from the head, as I've drawn this inverse head and shoulder pattern. And we had, we're testing that neckline basically. And so what I might do is extend this fib retracement. Actually, I'm just going to delete it and I'll draw a new one. But I do think it's pretty cool. I had doodled this out, And, that had happened. And somebody called me a shill in a comment the other day. And the reality is, YouTubers are shills. They have ideas, they share them, and then they promote them because they think that those ideas are good. They believe in their ideas. And so I am going to shill a little bit right here because there's a video that I'm very proud of that wasn't very popular. And so that video is right over here. Mara, breakout, retest, and launch, or just launch. And so I had proposed in that thumbnail, I don't know how well you can see it, so maybe I will, let's see, just zoom in. Oops, I'm zooming in on the chat. I mean to zoom in over here. And so let's see, sorry, I'm just gonna scroll back to that because I wanna promote myself for a second. But yes, so over here, you can see that green candle and then the arrow, pull back, retest that 50-day SMA, and then move up there. And so what we have is that same exact arrow. That didn't happen exactly as I had suggested it might, but at the same time, I posed it as a question, retest and launch or just launch. And so what we had was, it kind of moved up, didn't really retest too much, and then pulled back, retested, kind of fake out, break below, and then go higher. So I'm proud of that video, and that video has only gotten 25 views. And so I'm just gonna hide the chat for just a second so we can see that it's only got 25 views. Very sad. I was spot on with that. And I can talk about, we see that green candle right there. What did that day close at? And so I actually closed a little bit higher. So, from basically that yellow line at 750. And from there, where is price up to? Price is up to 26%. Could have had a little dip. That would have been like a 6-7% dip, actually maybe 10% if we go to those lows. And from, a retest of that moving average, which I talked about in that video, we would be up currently about 35%. So very nice there, very proud of that. And with that being said, maybe we are bumping into some resistance here. So that is a factor. And something that I noticed because I was at work, I don't really pull up TradingView when I'm at work, but I do have Webull on my phone. And so there are some levels that, let's see, is Mara on this list? Nope, it's in my stonks list though. So I'll pull that up. There is a level on here if I look over at the daily. And yep, there's like a little red trend line there. What is that based on? I saw it on my phone. Very interesting. I didn't think I'd have it drawn on TradingView. And so that level, maybe we could take it with a grain of salt, but that is based on the pivot points over here. And so maybe I'll actually kind of like transfer this line into TradingView so we can see that. But that's going to be based on the low from October 6th of 2023 and then the low of August 5th of 2024. And I remember that date. That was, a big panic date. I think that's when I bought some Tesla. Very proud of myself for that. But yeah, August 5th, and then like I said, October 3rd. So let's come over to the chart here to look at that. And let's see, this would have to be August 5th right there. I can tell because massive gap down, lots of panic in the market, but then we closed green, and that was an excellent dip buying opportunity. And then the other level is going to be the low from over here, October 3rd. I believe that's what I was talking about. Let's just make sure. Yep, actually, no. October 6th. So that would be, yeah, it was a little bit lower there on October 6th. So let's just draw, not a trend line, but a ray. So we have the two exact pivot points. So I'm going to do approximate right now, and then we can connect it to the exact highs and lows of those days. First by locking it in place so I don't forget to do that. And then we can just go to the coordinates over here. So this was a low on October 6th of $7.16. So I'm just going to adjust that here. And then over here on, let's see, August 5th, The low was at a price of 13.66, so just off by a penny there, but I'm going to make it exact. And we can see that shortly after that, we got kind of a fake out breakdown, test of that, and then some more tests over here before the stock price went up. Let's see, about 90%. So that's a pretty nice level. Then we pulled back here, formed that left inverse shoulder before ultimately breaking below it. So maybe it's a little bit hand wavy. Maybe it's not something to pay too much attention to, but we did, see an intersection with the armpit over here of that inverse head and shoulders. So I find that to be pretty interesting. Got a pierce of it on July 14th when we hit a high of 2150, but we actually closed red on that day. And then we got a near test of that trend line. And now it looks like, we hit a high, approximately that trend line. The high for the day today on October 14th was 2298. And so maybe we're going to see a little bit of a rejection. Maybe we're going to see a little bit of a pullback. And very interesting, that also seems to correspond pretty nicely with this little fib extension that I have drawn here, corresponding with that the 1618, which is right around $23. So very interesting with that high of 2298. Getting rejected from that trend line, nearly getting to the 1618. So I think that we could be seeing a little bit of a pullback, but I don't think it'd be like a huge one or anything. I think that Mara is still going to be going higher. But so with that being said, I'm just going to delete this extension. I think that we could look at one that's a little bit bigger picture. Or actually, no, because I think that we're going to pull back. What would make sense is to do a little bit of a fib retracement. So from the low over here, from that right shoulder, and then up to the high from today, I'm just going to draw it approximately. And then we can pinpoint it to those exact highs and lows. So the low over here on August 20th was at 1448, so off by a penny, but I'm just going to adjust that over here. And then the high for today, as I had mentioned, 2298. So we can see that, and we can see these levels that, are to the penny, from that, what I see is the 236 is around $21. That does correspond with like the consolidation highs over here. So we could be pulling back to that to find some support before then potentially continuing higher. Or we could get into kind of like the meat of that consolidation, pulling back to the 382, the blue line there. That would be around $20, also being kind of a psychological level. And so I could see it retesting 20 before continuing higher. If it does break a little bit lower, we do have like the consolidation highs here, lots of wicks going up and some candles just below the 50% retracement, and that will be around $19. But as you notice, the lows and the close on October 10th, that close was at 1865, so right around that 50%. So I don't know that we would necessarily be revisiting that level. So I could see a pullback to 20, finding support there, and then continuing higher. And so what I'm going to do is just draw from today's close, kind of like what I drew over here. I'm just going to draw a little pullback to around 20, and then to suggest that we might be breaking out above that trend line that I just drew. And I might actually do it like that. And I might actually redraw this a little bit differently. So, from today's close approximately, coming down to that 382 around $20, and then a break above that trend line, pull back, retest it, and then go higher. So that's what I like to see if we do pull back to 20, and I could see that happening, but this could also just pull back to like 21. So good to keep that in mind. And then I am going to look real quick over at some of the options data. I do have the contract that I hold. Again, it's the $50 call with the expiration in January. My average is 37 cents. And the high that we saw today was $1.25. So this is not one that I'm buying. And even on the pullbacks that we saw over the last week, we saw a low of 67 cents, actually 59 cents. But over the past few days, since really the 10th, when we had the low of 67 cents, I wasn't buying there. I was just chilling, still green, so I'm good. But the contract's not in the money, $50 strike, so it's a little bit risky in that sense. And we did see some selling, on Friday the 10th, leading into the 13th. So yesterday, we saw a decrease in these contracts by about 1,900. or 2,000, just shy of 2,000. And so this is, going to be risky. It's a time to trim. I trimmed today, so this is not something I would suggest buying. But you do you, whatever you want. Maybe there are some other contracts, but if we do look at the data over here, just kind of expanding the net call and put premium, this actually looks pretty good. So maybe we don't see a pullback to 20 as I was just suggesting. The reason for that is we see net put premium in red here coming down. So that suggests selling of puts, which is bullish. And that did end the day down by $3.36 million. So potentially selling of $3.36 million worth of puts going long. That's good. And then with the stock price rising in yellow, we also see the net call premium in green going up, and that ended the day up by $14.39 million. So that's bullish as well. So bullish selling puts, bullish buying calls, but this is not necessarily associated with the selling of puts, the selling of calls, but this direction does suggest that, because if you're selling, you're going to be lowering the premium because you're going to be settling for that price. If you're buying, you're going to be more aggressive. You're going to be pushing it higher, and that's going to drive it up. And what we can see from the bear bull slider right here, I'm just going to pull it down so it's not too far above my head, but we can see that about 50% is on the bullish side, which is the majority there, factoring in that neutral in the middle. So yeah, I think that Mara actually looks pretty good based on this data. I would be a little bit skeptical of this pulling back to 19, but maybe like what I would want to do with my contracts is, if the high for the contract that I'm holding, which is, this one over here, if the high for today was 125, maybe I'd want to do a limit trim. If my average is 37, it could be nice to do, a trim at 137, and then I'm making $100 profit on that. So I might do that, but still I have 5 contracts. I'm just going to kind of incrementally trim as things go up. And if it pulls back, I'm not really at risk of losing money because I've made a decent amount with it. Relative to how much I've risked, I would say, but it's not, tons of money, nothing too crazy. But yeah, so hopefully that's helpful, Benjamin. A worst nightmare, no problem. I'm slow to start, and you can always rewatch these, so no worries about that. And then Benjamin has a follow-up on Mara. Do I think that Mara can at least test 80 by the end of the year? I would not expect it. Let's see, why do I have Webull up here? I would not expect it. So my $50 strike, I'm not necessarily expecting it to get to 50 by January 16th, just as far as like risk management around this contract goes. But I tend to trim out of contracts a little bit early. So, yeah, but so, like with, kind of the panic that we saw last Friday, I think that's just like flushing out too much leverage. I basically trading call contracts because that gives me a little bit of leverage, but I'm not trading like perpetuals, which I believe perpetual futures in Bitcoin, or crypto, which is then exposing yourself to a lot of risk with leverage, and then you can get liquidated. And that's what happened on Friday. I think that flushed out a lot of kind of the like toxic or not so healthy leverage that was in the system. And so I think that flush could, allow the floodgates to go to the upside now, because there's going to be more leverage going short, which we could actually explore as far as Bitcoin goes and like CoinGlass if you guys are interested. But as far as this getting up to 80 by the end of the year, to be honest, I have no idea as far as what crypto is going on, what's going on with crypto the rest of the year. I think that we could really see stuff squeeze to the upside. Looking at this, this doodle, I'm going to delete it because that didn't happen. And actually, what is that doodle based on? What happens here? What did I do there? I don't understand what I drew there. That doesn't make any sense. Maybe that was because it was on the log scale or something. Oops. The log scale. Yeah, that had to have been it. I drew something like that. That's crazy. It could be, but clearly the time is behind us there. So I'm just going to not suggest that it's going up to $600 because I don't think that's realistic. But if we do come over here take like a measured move from the, we can do this in a couple different ways. One, let's see, I'm just gonna scrunch that down a little bit. I mean, I feel like 50 by the end of the year is possible. I think it's feasible. I think 80 by the end of the year would be a little too hopeful. But also, for me, it's like I'm not trying to be hopeful that it's going to hit 50 by the end of the year because I don't want to lose money on those calls by holding them too long. But yeah, one way that we can get kind of an idea of this measured move to the upside is just by taking a measurement from the base of the head there, that inverted head, to the armpit, and then just kind of going up from that. So like doubling that distance, and that would suggest a target of around $32 to $33. That's also reflected in the 1618 Fibonacci extension that I have drawn here from the head up to there, and then pulling back to the low here. That same distance is going to be the 100% right there, around 26. And so I think there might be some resistance around there, but then going up a little bit higher to the 1618, that would be around 33. Also kind of corresponding with the highs from February of 2024. So that would make sense that that would be acting as some resistance. But also we have the highs here from July of 2024 and of November 2024. Those being right around, let's say 25 to $30. So really, I mean, I think that there's going to be at some point in the range from $25 to like $35. I think that there will be some notable resistance and maybe a pullback. And so like what I have doodled here, it could be something like this, where it goes up to like 33, then there's a big rejection, and then it finds that trend line as support and then continues higher. But, I'm not going to say that I expect that or anything, but I do think that it could be going pretty crazy, like the highs over here around 80. But yeah, I'd say my price target for this year, being greedy, would be $50, not 80. I think that 80 could be hit sometime next year because I think that what we're seeing is kind of an elongation of the 4-year bull cycle. Raw Paul talks about this, and a bunch of other people are talking about this. And that's just like, things in Washington are taking a little bit longer than you would normally expect. And just like the fundamentals in crypto are really strong. And also, with Mara and miners, they seem to be kind of leaning more in the direction of data centers and energy. And that is going to be very bullish continuing into 2026. So I could see 80 being hit in 2026. This year, though, I think that'd be greedy, or if 80 is hit this year, I think it'd be a wick up and a close that same day lower, a pretty massive rejection. That would be like a blow off top, and then maybe pull back to this trend line to find that as support. So that is something that I could see. And, with that being said, I was just checking the time. I've been streaming for about 38 minutes, so I might kind of end this soon. But I will pull up, Wendy's real quick because Chris is asking about that. And so let's just pull, Wendy's. And so let's just pull that up. Yep, so Green Day went up by 2.88%. So, maybe the bottom could be in there. That's a pretty, bullish candle. Although the thing that I would say concerns me about this, maybe you can see it. That's a massive green candle. That volume is not really that massive. I mean, over here, when you see this big candle, I'd want to see something like that to like, oh, there's a lot of volume. It's picking up. So this could be, a fake out move. So I'd be cautious of that. And one thing that we can see, I'm just going to do a little trend line here. Just going to hold the shift so it's horizontal. But, there's that resistance or that prior support going to be flipped to resistance. Nearly got to there. So that's going to be around 910, somewhere around there. That could be some resistance. So I'd be cautious of that. And actually, so we have the number pinned on the side. I'm going to do a horizontal line, horizontal ray. And I'm just going to do that from the low or the close. I guess maybe they're the same from September 23rd. The low was 908. The close was 909. I'm going to do it from the close, 908. We can see that there was some support there. And, that's probably going to be resistance now, especially if volume's not backing the move. So I'd be cautious of that. I think that this could be continue the trend of just being a real loser overall. So I'd be cautious, but you, do what works for you. And then I did also, because I think I mentioned it over here, did want to go over Bitcoin. I didn't realize I included IBIT, and then also Ethereum. So if I do scroll down here to look at some of the cryptos, we can see Bitcoin got some drawings over here. We can see that got this fib retracement. I might actually just delete that for a second. So we can see that we are trading below not only the 50-day SMA, which is around 114,440, but we're closing below that whenever the close. That's a level we want to close above, I guess I should say, 114,440. Also, we can see this orange line here, which, let's see, if we take a step back, we can see that orange line intersects with the highs from January of 2025 and December of 2024. Also goes back to the highs of 2021. And it ultimately goes back to the highs from December of 2017. And so that seems like it's, maybe kind of an important level. And we are, sorry for all the zooming in and zooming out. We are below that orange level. So maybe that's a little bit concerning, but generally I think that this is going to be going higher. I do have some $90 strike IBIT calls that expire in November. I'm getting a little bit nervous about those, but I have been buying the dips. I think that what we're seeing is a little bit of a shakeout of weak hands. I think a lot of people are saying, hey, the bull market's over. It lines up with the 4-year cycles that the top could be in over here. And so I think a lot of people are seeing that, and they're, paper handing down here. They're panicking. And I think that whether it's, for October or into November, December, or 2026, I think that we're going to be seeing some upside. And and so just mentioning IBIT, since I do have some calls with this, it's not really looking so great. But what we can see here, I'm just going to draw this a little bit for myself. So I have a little bit more confidence. We do see, this uptrend here, higher lows being formed, and higher lows, and it was green today, a little bit of a bounce. And what we can see here is also this Fibonacci extension. I might just extend that forward a few days into the future, just so we don't have the numbers blocking the candles over here. And we did get a pierce of the 786, which is around $64. But we did close above that, closing, actually, I can't say $64 because we closed slightly lower at $63.91. But we did close above that 786, which is at 63.77. I should also note that the 50-day SMA is corresponding with that 618 right around $65.50 or 45 cents. And so there are some levels for us to be reclaiming to the upside. But this was a green day. We actually did end the day red by 2.89%. But we did bounce, opening lower, regaining some of what was lost. There's still this gap here. And so I could see this, slingshotting up to back into the 70s. But, I'm also biased because I want my calls to not go to zero. But yeah, so that's interesting. And, since I am mentioning it and stuff, I might just pull up the contract that I hold, the $90 call that expires in 38 days. So getting a little bit nervous. We have seen some selling the past couple of days, but prior to that, we saw thousands, if not tens of thousands of dollars going into this contract. So that does make me think that this little bit of red that we're seeing here is not really that crazy. And we did see a lot of volume on the 10th and the 13th. 22,000 and 12,000 contracts traded, but it didn't really lead to that much of a decrease in the contracts. And today we saw a volume of 8,600. And so it will be interesting to follow up with this tomorrow to see if open interest goes up or down. But I'm not sweating it. And what I want to pull up over here is the net call and put premium. We can see that the stock price, or the ETF price, I should say, has gone up in yellow there. We can see in red that net put premium came down. So that's a good look. Net put premium came down by $5.46 million, whereas net call premium in green also went up like the stock price, or the ETF price. And the net call premium increased by nearly 18 million at $17.73 million. So that generally is looking bullish, that a bottom could be in. And if we do look at that bear bull slider, we can see that the majority, which is 50%, is on the bullish side. So this is looking net more bullish than bearish, factoring in that neutral territory there. So yeah, I mean, this is looking good. And if we look at the Greeks, we can see that max pain for this week is 65. Then, yeah, I mean, the highest it gets between now and the expiration of that contract is 67. So, I mean, if we do see some big moves to the upside, maybe that could trigger a gamma ramp. But right now, maybe the bottom's formed and we start to see it rally into the weekend. That would be really nice. And then just to go over ETH real quick, this is from the most recent, let's see, Ethereum thesis renewal with this trend line here. We did get some closes below it, but we have reclaimed that uptrend, so that's looking good. We did get 2 closes below it, closing on the 10th at $3,836.70, and then closing on Saturday the 11th a little bit lower at around $3,750. We are now back up above, although getting a little bit of a red candle today, coming down about 3.28%, but that's following, this pretty nice bounce. Maybe we then pull back to retest that trend line again, and that could be coming down to around 3,900 to 4,000 dollars. And we did, effectively test that today. We hit a low on the 14th of $3,891.80, according to the Bitstamp data here. So I think that this could be moving higher. We do have the 50-day simple moving average above us around $4,350. So that's going to be a level for us to break above and hold. And then just looking over at this other chart, I do have this. This is same Ethereum. This is just from Coinbase data. This is what I go over for Crypto Corner Stat Stacker. We do have this parallel channel here. We got a test of the base of that channel. And so now what I'd like to see is a break above the top of it and then a retest before continuing higher. So we'll have to see. That would be a break to above right around 5,000, maybe getting rejected there, pulling back to around 4,500, finding that as support, and then continuing higher. So that is what I would like to see. And Anon is saying net call premium. I'm not sure what you're referring to with that, but yeah, net call premium is going to be, what I was going over in the charts over here. The green lines, net call premium, or NCP. And that's going to be, the exchange of call premium. Is that going up or down? If the value of it's going down, that's going to likely suggest selling, because like if I have a call that's valued at, $100 or something, and then it goes down to like 95, maybe I sell. I think it's topped, it's starting to roll over, and so that net call, or that call premium, would be going down, and that would then result in the net call premium going down, and vice versa with net put premium, or NPP. If that's going down, that suggests selling of puts. If that's going up, it suggests buying of puts, and so that's kind of a nice indicator for things going up and down. And yeah, like with Mara, with IBIT. Oh, actually over here, I thought I had, because I pulled up the max pain. But if we look at the overview for the day, we can see this looks very similar to what we're seeing with Mara. Net call premium in green going up for both of those, net put premium going down for both of those. So that does really seem to suggest to me that Bitcoin miners could be bottoming and going higher. Although if we look at Coinbase, this is a company, net call premiums going down. You see insiders like the CEO, Brian Armstrong, selling. Maybe this could be a rotation of capital from exchanges into miners and Bitcoin itself. So very interesting to see that there. But yeah, I've streamed for about 49 minutes. If I stream too long, then I'll get tired and I won't want to make more content later. So maybe I'll do a follow-up video later. But I think that this one just has some really nice content on Mara and Coinbase. So maybe I'll actually just release some clips of this later this evening. Same data, same day. And yeah, so hopefully that's useful. I don't know why I'm pulling back to that. But I am just going to, let's see, come back to this so I can hide Anand's comment. And then I'm just going to throw this up here. Thank you all so much for joining. As always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below or in the chat. If you're joining live, make sure you subscribe for more videos and streams like this. I'll do another stream tomorrow, probably at 4:30 again, just so I come home, do this, and then go on about my day. And I think it's more likely that I'd put out a video in the evening. And tomorrow is Wednesday, so I'll be doing some power packs, so that should be pretty fun. Fun for me and fun content. Those videos have actually been picking up a little bit. And let's see, is it your account on X? I want to say Sheldon, but W Shields. Let's see, I'm just going to pull it up so everybody can see. Thanks for the live. Of course, yeah, I know you on X because of that Captain America shield. So you're welcome. Thank you for joining. Hopefully what I've provided, and actually, since I have my phone over here, so I'm not pulling up your X account on the stream, I am just going to Pearson. I don't know why I want to say Sheldon because I think of Shield. But yeah, Pearson, thanks for joining. And unless you'd prefer I say W Shields, I can do that as well. Pearson, yeah, exactly. I got it. But yeah, thank you so much for joining, everybody. And I might just release clips from this tonight because I think that the Mara and IBIT is kind of spot on. Actually, maybe I'll just change the thumbnail to this to say something more about Bitcoin and Mara and IBIT going higher because I think that they do seem like they could be bottoming. But yeah, maybe I'll put out a video tonight. I'm not sure. But yeah, thank you so much for joining, and I'll see you guys in the next one. Take care. Have a great rest of your